Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be sharing with you my views on the Dow Jones and then get into this week's stocks of interest. First, hit that subscribe button and click that bell on the right so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Standard Time.
Please remember that this report is an educational tool, and as such, your personal circumstances have not been considered in the analysis of the compilation of shares included. The content of this report cannot be considered personal financial advice.
Okay, the Dow Jones is actually looking quite interesting this week. We've had a lot of resistance of getting through that previous all-time high. So let's have a quick look at the chart. And on the left, you see the monthly chart. On the right, we're seeing the weekly chart. So I'll go have a look at both of those before we get into this week's stocks. Now, I'll just bring up that monthly chart, and you can see here how we've got a high there of 26,616. Then the all-time high, or the current all-time high, 26,951, and then this month so far in May, it's 26,689. Now I'll just drag that up a little bit so you can see that a hell of a lot more, and I'll just use my little crosshair tool if I hit the right one, and we can see here how right now the highest close that we've had is around about right there. Is the highest close we've had there, and that's at 26,591, or the highest close that we've got there. So we really do need to see it push through that sort of level there, and be interesting to see whether it does that this month. And obviously we've had 1, 2, 3, 4 months up. We might get a month down. May be the month down, and there is a whole old wives' tale, go sell in May and go away. That came from the UK basically, or where that's the summer months that people go off on their or not the spring, it's springtime now, but people, go off on holidays for their few weeks on holiday, and then they come back. So they sell their stocks and come back. That really doesn't cut it anymore with a global economy, so it's not necessarily the same. So whilst I think May might be a down month this month, I don't necessarily think it's something that we can rely on to be trading on. But right now is reporting season coming up and everything else, which is interesting. But right now I think the market needs to move above that sort of level. So let's go and look at the weekly chart. We'll bring that up. And you can see that big resistance level that I was just mentioning there. Now, the market is a bit more indecisive. If we look at those last few bars here, you can see here last week open and closing around the same level, or 2 weeks ago, and then last week opening and closing around the same level. Last week it closed a little bit lower at 26,504.95 points. Nice range, and the range was really interesting. It broke below the previous lows of other weeks. So you can see there the low there at 26,180. Not quite below that low there at 26,062. Be interesting to see if there's another week down. If we do get another week down, forget about this. This is not really a trend line. I'll get rid of that. Oh, it's getting rid of everything else other than my trend line. But it is moving up nicely, but it's tipping over. You can see here it's just a beautiful, strong move here, but momentum is slowing a little bit as we've got to this all-time high. So the market's not bearish, but it's not super bullish at this point in time. So just be a little bit careful because there would be some really good stocks at the moment on the marketplace, but there'd be other ones just slowing down. I think we could be getting a shifting or market shifting, reweighting portfolios, that sort of stuff could be going on. Now, let's get into this week's stocks of interest. Now, as I said, I think we'll wait to see what happens next week on the Dow to see whether we get a down or up week, but I think it will be bullish towards the second half of the year. So let's go and look at this week's stocks of interest. Now, we've got a comment from, who is it? Jazz Mac. Jazz says, thanks for doing a weekly update and incorporating Disney into your analysis. Another stock I was interested in is Adobe. Now, I like the business model of having a subscription service. To me, I feel like Apple, they don't have to make, unlike Apple, they don't have to make products annually, so minimizes overheads and just release their updates to their cloud services like Disney. I haven't yet bought this stock, but waiting for a slightly better opportunity. Now, what is a slightly better opportunity? That's an interesting comment. But really, subscription services, unlike Apple. Now, Apple has subscription services. iTunes, they've got Apple Music is a subscription service. iTunes You've got all sorts of things. They sell music, they sell videos. You get in and you can rent videos from them, not just buy them. You can do all sorts of things. They have their Apple cloud services where you can subscribe to cloud storage for Apple. So Apple has a lot of subscription services, just like Adobe does. Apple doesn't just make products, it makes products that also people will use for subscription services anyway. So it's not really as simple as that. But you've also got other things, lots of other subscription services, and subscription services companies have exactly the same issues as every other company. Just because they don't make a physical product in terms of making a widget and then selling the widget, they still have the same sorts of things. Like Disney is going in against competition against Netflix, which is what we talked about last week. And we'll bring up Netflix and this week and have a look at that stock code, and we'll look at a couple of other subscription services type companies. But more competition, there's cost. There's obviously people have to continually update software. They continually have to fix bugs in it. They have to fix security breaches, all those sorts of things. So there's a lot of different similarities, or different similarities. That's not really a good way to say. There's a lot of similarities with companies. It's more about you only buy companies that are going up, sell ones that are going down. Really what they do is irrelevant to me as a trader. I just want to buy stocks going up and get out of ones coming down. So waiting for a better opportunity, you might be waiting forever and a day for a better opportunity with Adobe, or it could be coming next week. It's about having rules around buying and selling. But let's have a quick look at Adobe itself. So if looking at your screen now, you can see Adobe there, and it's beautiful, beautiful uptrend. And it's recently all-time high there at $291.71 back in April. So far this May, it's gone a little bit down. It's down. There's a range of $12.85, closing at $2.85. Now, looking at the history of Adobe, you can see here how there's a long period of sideways movement, but it's been really, really bullish since about 2011, and it keeps moving up. Now, if you've watched my videos, you'll know that the angle of that trend starts to tell you whether it's running out of steam, because eventually stocks, just like anything else, like whether it's a manufacturer or whether it's a telco or whether it's a software company, they eventually get too pricey for the marketplace. So they overheat, because humans, we keep buying while it looks like it's going up. Now, it may be coming down. We've had 1, 2, 3, 4 months up. This one could be a month down. So you might get a better price, but what's the price? Where's it going? And that's really the important thing for traders. I find people go, I'm buying this stock because it's cheaper, and it should make more money. But buying on an if come is not a way to buy. You need to understand how far is it likely to go? Where is it likely to go? The strength of the trend, how much money you're going to make. Before I get into a trade, we actually calculate how much money we're going to make on a trade if it continues on in the direction we think it's going to go based on our analysis. If you're guessing, then you don't know. You might get into this stock, $10 cheaper than what it is today, and you're thinking you've got a great buy. But if it only goes back up, double tops, then comes back down again, and then you exit at a loss, then it's not a great buy. It's understanding how the market unfolds in price, pattern, time. And they're really critical things to understand the direction and strength of the stock. And this is stuff I teach in my courses. So it really is something to really look at, rather than just saying, I'm just going to get a better opportunity for it. It's about having rules around it. I'm going to show you Apple, because you did mention that stock. Now, Apple to me is a brilliant stock. It's been one of the best stocks over the last 30 years on the market, and with Microsoft, these are the two biggest companies pretty much in the world, aren't they? Looking at this, that's looking much better to me than Adobe in terms of strength. And look, it's just beautifully moving up, and it's more sustainable. So I do like Apple as a stock. It's one of the FANG stocks that we talk about. You're looking at this move up here. It's just moved up quite nicely. It's not its all-time high. It's all-time high 233.47. I would suggest if it comes down over the next 1 to 2 months, which it may do, that would probably be a better buy than Adobe in my book right now. So that's what I'd be looking at. Now I'm going to look at Netflix, which is obviously the competition to Disney, what we were talking about last week, or in last week's report. Now Netflix, looking at that on a monthly chart on the left there, you can see here how, again, it took off like a rocket, and then it came to an all-time high back here in June 2018. If I look at my little pointer here, and if if I can get it right here and stick it on there, you can see how it dropped 45% in price. Now, really interesting. So it's moved up very, very nicely over the last few months, but it's just running out of steam a little bit here. So I'd expect maybe a month or two down, but it is possible it will take off. But right now it's adjusting because obviously Disney getting into the marketplace is possibly what caused this, or the news about Disney getting into the marketplace and giving competition. I mean, obviously Disney's got a great library of videos or movies, that sort of stuff, to give that competition to Netflix. But this is maybe the market's still bullish on Netflix right at this point in time. So obviously there are people quite confident about what Netflix is going to do. Again, a subscription service. Now, people do subscribe to things, they cancel their subscriptions. I know I've done that many times on different services. Even in the last couple of months, I've unsubscribed to subscription services because I just get bored with it. So Netflix, I've got a subscription with them and I might cancel that sometime down the track, and I'm highly likely to if it doesn't keep giving me things that I like to watch. Another subscription service company in a different area is Salesforce, and you can see here the stock ticker code CRM, or Customer Relationship Management, that's what they've called it. But you can see another subscription service. Now, Salesforce is a customer relationship management software. A lot of companies use Salesforce for their sales team and their marketing and a whole range of things. We've actually looked at that. They've got a whole marketing system. Now, Salesforce is the most expensive one on the marketplace. And you can see how it's been beautiful trending since 2004, moving up, moving up, moving up. Now, they've got competition coming out on them left, right and centre from a lot of different places. Now, we don't use Salesforce. We actually went somewhere else that was cheaper and just as good in our book. So to me, there's competition everywhere. But having a subscription service is very much like a utility company where you're paying your energy bill every single month, whether your telephone bill every single month, those sorts of things. So there's no difference in how they work and how they unfold. But Salesforce is looking good. It's had a new all-time high recently, which you can see on the chart here. It still looks like it's a little bit more sustainable in terms of that. I don't think it is as vertical as Adobe in terms of the momentum it's doing. But right now it's looking all right. So I do like Salesforce at this point in time. Would I get into it now? Maybe not. I think I'd probably look at other stocks. I mean, as I said, Apple probably is more exciting to me, and Netflix is probably more exciting to me at this point in time. So they're what I look for. But if you've got any stocks that you'd like me to look at in the US, I'm really, really happy to do so. You need to go down there into the comment section, type it in saying, and like this person here, tell us what you're looking at and why you're looking at, whether you own it, whether you don't own it. Happy to answer also questions for you if you do that. So please make some comments below and let's get stuck into some really, really great stocks over the coming months, because I think there's some good opportunities to be had in the US market. But for now, goodbye, good luck and good trading.